What's up guys and welcome back. So if you were in the day trading live stream this morning, that was pretty intense, quite the roller coaster that we had. We were able to get away with just a small loss today, 3.5% loss, but yesterday we had a nice 7% gainer. So, we are kind of right on track with hitting our monthly goal. The thing is though, we had a really bumpy start to the month. In October, we were down actually about $500, and that's because of really one bigger loss. That really comes down to, I would say, two things. And the first thing was we were not allocating our position sizes properly. So sometimes I would take a trade with $600, and then sometimes I would take a trade with $2,000. Mind you, our whole entire account size right now is $4,000. And I was trying different exchanges and all that stuff, so there was poor allocation, and we fixed that problem in the video right here. If you have not checked it out already, definitely go ahead and do so. But there was kind of a second problem, and that problem was really the strategy. I was not really fully tuned in on the strategy that we were going to be trading for this $25,000 challenge. So in this video, I really want to be talking about the momentum trading strategy, or the gap and go strategy, which is a momentum trading kind of setup. So in this video, we're going to be diving into that. Okay, so coming over to enzo.com, I already have a few things written out. And the first thing I want to talk about is that the gap and go strategy is a continuation setup. We're basically trading the trend. If there is something making moves to higher highs, and then we look for a number of different types of entries so we can continue riding that momentum. We're going to be talking about a few of those different types of entries later on in this video. There's tons of traders that do momentum trading and gap and go. It's really not some sort of secret strategy. It's really just about, figuring out what works for you. And one of those traders is Ross Cameron, and he talks about this pattern all the time, and it's really where I got a lot of the information from. He's got a huge YouTube channel with almost 500,000 subscribers, and he posts a ridiculous amount of videos, like 2 a day. So you can find a lot of good information from him to really dive into this strategy all you want. One of the nice things about this strategy is that you don't really have to be trading 24/7. So when I trade crypto, the market's 24/7. You don't really know when the momentum's going to come. It's all more a bit of a, setting up limit orders, kind of being patient, waiting for the volume. But this momentum trading gap and go, and it's one of the reasons I've been a little bit shaky with it, is it's only from 9:30 to roughly like 10 a.m. Although it also kind of, you could say, just the first 2 hours. So basically the market open. Basically you're going to be trading 2 hours, but by 10 a.m., and this is when we usually stop our live streams, is you're more or less, you can be done if you want. I mean, by that time you should already have at least one trade in. If you have more trades you can do, you could probably already be on your second or third trade. And so by 10 a.m. you could in theory be done trading. So within 30 minutes of trading a day, you could be totally done, and then maybe allocate another 30 minutes before and after, before to build a watch list, go over the scanner, and then after to maybe review your trades or something like that. But ultimately it's very, very quick, and it gives you tons of free time. And on this channel, I like to focus on things that is perfect for people with busy schedules. That's really what I want to be focusing on. So let's talk about the scanner very quickly, and I'm going to be coming out with a whole entire scanner video where I review my scanner in detail, what I use to build my watch list every morning. So if you're interested in that future video, make sure you are subscribed and hit that bell icon too, so you'll get notified when that video comes out. But for now, let's just give a quick little overview. So we run a pre-market scanner. We look for a float of about 50 million, and then our ideal price range is between $1.50 to $10. And then obviously all the stocks that come up on our scanner, we want to find what kind of catalyst it has. We want it to be a former runner, and on average we won't really be finding more than 2 to 4 setups on these scanners. I like to just really focus on 1 or 2 setups per day, no more than that. I feel like every time I go more than 2 setups, I overwhelm myself a little bit. Here's actually a screenshot of my scanner in detail, so you guys can replicate it based on this screenshot. I will also leave a link on this post so you can upload my exact scanner into your Thinkorswim TV Ameritrade account. This was the scan we ran today, and it only came up with 5 stocks. These were stocks gapping up with our criteria, an ideal amount of shares, an ideal market cap, in the price volume. And this is actually the one we traded today, HEPA, and it It basically did exactly what we wanted, but my entry wasn't perfect, so I ended up getting stopped out. A small little loss, so it really wasn't that bad. But yeah, I mean, that's just how it is. You win some and you lose some. Even the best traders are profitable around 70% of the time. I think Ross Cameron is about 68% right now, according to some of his last videos. So I mean, right now we are holding around 60% ourselves, so not really too bad at all. A little checklist from all the things that I've gathered from all these different traders I've studied, specifically Ross's with this gap and go strategy. You want to obviously scan for the gappers. We've done that now. You want to then prioritize the low float stocks, so things really trading under 10 million in float. Then you want to hunt for the catalyst. Why are these things up pre-market? You know, is there news? Is there earnings? Big contract winners, such as a big partnership with, let's say, YouTube, Google, Facebook, or something like that. Maybe a new order on something. Those are really powerful catalysts, and those, or maybe a new drug, FDA approval, something like that. Those can be really good catalysts. Then on your 5-minute and your 1-day chart, you want to identify some key support and resistance areas. One thing I also like to do, if I have the time, and I should always make the time for this, check out some of their financing deals. So I'll be coming out with a video in the future where I am looking for some dilution. So did they recently, for example, maybe sell some new shares to some investors that can sell those new shares and dilute the market at a certain price? Those are some things I like to look for as well. And then you just really want to prepare your orders before the market opens. So let's say you're trading a stock like today at $4, and you have about $1,000 position size. So maybe set up a limit order, or at least set up in your trading account that you are ready to place an order at, like maybe 250 shares, maybe 240 shares. So there's a little bit of wiggle room. Just make sure you're ready to go. So if there is a pattern starting to form up really nicely, you're ready to execute that order. And then again, the biggest thing I have learned is really just focus on 1 to 2 stocks after the market opens. If you start looking at different stuff, checking the screener, too much, and then jumping into a potentially hot opportunity, sometimes you really get blindsided, and that's really not what you want to happen. It's better to just end up missing a trade that day to forcing a trade that just should have never been. So trust me, you'll be much happier down the road by just focusing on 1 to 2 picks. Now, one thing that I've learned, and I didn't really pay as much attention to as before, is you want to be looking for stocks gapping up and then consolidating pre-market from that high range. You don't want some sort of extreme selling off or something that's super overextended pre-market. You really want a nice spike up and then consolidation. So the stock we traded yesterday, I have a little screenshot here, VVUS. You can see that this one wasn't exactly perfect. And I was really cautious about trading this one because we had a really big pre-market high spike, but then we weren't really holding this area. It would have been much nicer to see us hold about the 3.4 area. So that's why I was quite hesitant when the market opened. I didn't trade any of this, and it wasn't until we were kind of consolidating in this area that I ended up getting a little bit more aggressive and then buying in this bull flag right here and then selling right into the breakout. And I remember, the selling pressure kind of started coming up a little bit, and I just got out of this trade right away. I took my 7% and left. And that's because, it wasn't as nice of a pattern. The pre-market was selling off a little bit, and I just didn't really trust the whole way this thing was playing out. So you want to be really quick with these gap and go trades. HEPA, what we traded today, was a little bit nicer, but I ended up trading that red to green move a little bit too early, and I ended up getting faked out. So even if you have everything looking good pre-market, you still really want to be a bit patient and really wait for a perfect kind of setup to come to you. So let's go ahead and talk about the 6 different ways you can enter this gap and go strategy. And also guys, if you want all of the trade reviews, so I always post pictures of all the past trades, go to enzo.com/25k journey. And then you will go to the small cap thread where I post all my trades at the end of the day. And for each one of these 6 strategies, I'm going to probably make a specific video for, and I also am going to be documenting each one of these 6 strategies in my trade journal. So every time I make a trade on a trade journal, let's go back over to day trades, and then I make a trade. For example, this was the first pullback. After the end of every trade, I can basically select which pattern, and then under day trade stats, I will start seeing which pattern is doing the best. So once we hit maybe 100 trades, that's going to be really interesting to identify which one of these patterns is the best for me. So I'll try my best just to kind of explain these patterns as they are. So we have the 1 minute opening range breakout, and all that really means is when we break out on the opening bell and we are breaking to new highs, and not looking at what the pre-market is. So you can kind of see that happened here. We had a nice green candle to start off the market with. We had a little bit small pullback. If you saw maybe on the 30-second, you would have seen a pullback here. And then again, we had another breakout. So this was a 1 minute breakout. I typically never trade the 1 minute breakout because it's extremely quick and somehow I always miss those. So this is really not one that I trade too much. Now the second one is a bit more obvious. You have the break of pre-market highs, and if we just go back to this picture, so let's say we start holding our highs here, we maybe consolidate in this little area right here at the 3.5, and you can see here there's a high of 3.7. So let's say now we break past the 3.7. So you could enter on the breakout of that, and I typically don't trade direct breakouts, so I probably wouldn't be entering there. But if we broke out with big volume, and what I would personally look to do is look for a little consolidation back to 3.7, and I'll go ahead and enter there. So that would be a really, really nice break of pre-market highs on a pullback. So then we have a first pullback and a second pullback. We had that 1 minute breakout right here. Then we had some consolidation around the VWAP. And this consolidation was forming a nice bull flag. You can see here, we're just basically consolidating in this area. And this is really that first pullback after this 1 minute breakout. And that's why I called this one the first break. And that's why I called this pattern the first pullback. And again, here we had a secondary pullback, but this one tried to break to the upside, kind of got rejected, started having some selling pressure, and then never really worked out. You typically don't want to trade the third pullback. That's the time it starts getting a little weak, although sometimes, it does 3, 4, 5 pullback breakouts. But the first two are usually always the strongest, and in this example, the second one didn't even really work that well at all. And then you have the red to green move, and that's the one we did today. So you know what? Let me just bring up the chart today because there's no way I can't talk about it. Okay, so I got the TD Ameritrade Thinkorswim platform open, and here is the red to green move. And you can kind of really see this one quite well on the 5 minute chart down here. We had a nice little morning panic, then we formed somewhat of a base, and then we rallied past the pre-market high right here. This would have been a pre-market high breakout, but I obviously don't really like to trade that pattern. If I would have traded this one, I would have probably traded this bounce over here as that breakout bounce. And we were looking at this chart a little bit too zoomed in. So I was using the 133 tick view. And if you just come over here, I thought we were getting that full entire green to red move already. So I entered this trade a little bit too early. I was kind of thinking that this might be the red area in terms of the lower support. We were kind of making higher lows in this area, and I thought we were having a nice little rounded bottom, and we were probably going to break to the upside right here. So I was just way too aggressive. I should have chilled out, looked at the 5 minute chart, noticed that there was a big support forming here, and then entered a little bit later. So my entry was just way too early on this one. And in the future, I would like to start trading red to green moves either in a breakout to the upside, which is kind of tough to do because we had two fake outs right here before we really started moving to the upside. So you could look for something like this, but to me, this is more of the first pullback because we have a nice breakout from here. We have a big bounce back. And then we have a continuation. And this would be, to me, more of the second pullback. So to me, I think getting in this area right around here at the 3.8, something like that, as a bottom is clearly starting to form, that would be a little bit more interesting for me to get into. It's a bit better risk reward. So that's how I'm going to look to start trading red to green moves in the future. The rest of this pattern looked pretty good from the beginning. I mean, we had this big gap up, we were consolidating, we were holding our highs, but right here near the end, you can see we kind of had this little pre-market rally of about 15%. So we were a little overextended. We weren't in that sweet spot of having a pre-market high and then a little bit of pullback. If the market opened right here, it probably would have been a lot cleaner. because this is forming a really nice high in this area. We're holding it. We're not fully overextended. So it would have been nice to see a little bit of a pre-market pullback instead of opening as high as we did. And I think that was a big reason behind the fact that we had one of those strong morning panics. And then we formed this rounded bottom right here, is because we were a little bit overextended. And then for the sixth entry, we have the 1 minute micro pullback. And this one's really, really tough to trade. And I probably won't be trading this one at all. But if we come back to the chart from the VVUS that we traded yesterday, you can see again that this area where we had kind of 3 green candles, a 1 minute micro pullback is basically where you remove this middle candle. So we have one big green candle and we have a second big green candle. And sometimes you can get those on the 30-second or the 133 tick chart, but honestly, I probably won't be trading that pattern too much at all. So I think the first one and the last one is something I'm gonna probably leave off of my setups. Now, if I get really good at this and I notice that that 1 minute is having that pullback consistently and I start recognizing it all the time and I start feeling really comfortable with it, then yeah, of course, I would definitely start looking into that. But right now for me, I really like the red to green move. To me, that makes a lot of sense. I like that first pullback and the second pullback. I think they're both really good. And then to me, the break of pre-market highs just makes a lot of sense. I think that's a very, very clear support and resistance area. And again, guys, I'll be using my tradejournal.co Google Sheet to track these entries and setups to figure out which one works best for me. If you guys want to check out that Google Sheet, just go over to the Trade to Win forum thread or journey thread. There is a link in the video description below. Something I've noticed that Ross talks about a lot is the fact to always look for near half dollars or whole dollars. So let's say a break over 50 or a break over $5.50 and then a pullback to that area. That can be a really good entry zone. Those are usually major resistance zones. So if we have a nice big break over that, former resistance is oftentimes a new support, then a bounce back to that area could be a really, really good entry. Or you wait for a real bounce and then a breakout to new highs to buy there. Another really nice thing about those entries is that it provides you with a really clear stop. So let's say you entered at 5.55 and then the price is kind of starting to get weak, start selling off. If the price breaks 5.5, you want to get out of that trade. So maybe around 5.45 or something like that, that's where you can have your stop to be ready to get out. So let's talk about some of these ideal exits and these ideal stops. And I'm going to continue using the $5 stock just because it's pretty easy to talk about. What Ross talks about a lot, and I've seen it again and again in his trading, and I've started to implement it in my trading, and that's how I've been able to reduce my losses, is he has usually a max hard loss about 20 cents. And then he looks for profits around 20 to 40 cents. Now that's roughly an ideal 4% max stop loss and anywhere between a 4 and 8% profit zone. So yesterday we had a 7% profit and today we had a 3.7 roughly loss. So we are perfectly falling into this zone. Basically, we just got to keep doing what we're doing and eventually we will hit our $25,000 goal in this challenge with this strategy. Even with a 50% success ratio, you would still be profitable with this strategy. And right now, our success ratio is about 60%. And that's with this new strategy that I didn't really trade too much before. So I think we can get it up to 65% by the end of maybe next month or by January, the latest. I'm super sure about it. Also, to make yourself a little bit more secure, you could look for bigger moves, something with a potential profit to loss ratio of 3 to 1. That's especially good when you're limited to trades like we are because of the pattern day trader rule. So just be even more patient, wait for a perfect setup even longer. Don't take those, quick 1 minute spikes or something like that. Let the trade really come to you. From my personal experience and also what I've picked up a lot from what Ross says is, when is a good time to get out? One is when there's big sellers starting to pile up on the level 2. You've noticed more and more selling activity. That might be a good time to just bail out and sell into the bid. So what people are bidding to buy at. Sometimes if you set that limit order to sell closer to the ask or even behind the ask, the price doesn't really reach that area. Before you know it, the price comes crashing down, and it's really hard to get out sometimes when the price falls very, very quickly. It'll fall, 5-7% in the snap of a finger. So you sometimes want to be selling on the bid. Another indicator is when just the buying slows down in general, and you can see on the time in sales a bunch of sale orders go through. That might be a good time to think, okay, other people are getting out of their positions very quickly. Maybe I should too, just to, lock in some profits or something like that. I just don't want to be on the wrong side of this trade, because remember, sometimes, the buying slows down, and then before you know it, it's just a big red candle, and you don't want to be part of that big red candle. That happened to us, I think it was on a Tuesday. Not really fun at all, because we were up 6% on that trade as well, and then we were instantly negative. So that was not really fun. And that was just because I held a little bit too long. Once you start building up bigger positions, what you can also do is sell half of your position at the ask, especially if there's really good momentum and you think that this is a really good, there's a good chance for a secondary breakout. Maybe just take some of your profits off the table. Close half your position, especially once you've reached your first target area. So if you wanted to take profits at 7%, take profits at 7%. And if you think it'll go up, 14%, 20%, great. But, at least if the price goes down, you can close out your trade and you'll still have a winner. If it goes up, you'll still have half your portfolio ready to go. So, take those profits. You don't want to let a nice 7% trade turn into a negative 5% trade like me on Monday or Tuesday. It's just really not what you want. One thing that's definitely helped me a lot is look for entries on the 5-minute chart and also exits on the 5-minute chart. Slow your trading down a little bit. By slowing yourselves down, this is going to make give you a huge advantage to looking for the best setups. 2 weeks ago, we didn't have one red trade, and that week I was like the Zen master. I was just really, really patient, and that was our best trading week. So there is definitely something that goes hand in hand with just really slowing down your trading and waiting for the best setups. Something that Ross talks about quite often as well is the breakout or bail. So these are momentum strategies. So what that means is we're looking for price to keep breaking out because we're buying on breakouts, we're buying on pullbacks. So if you're in a trade and there's consolidation that's just going on way too long, the volume's going down, there's really no reason to stay in it. You want to just get out of that trade. If there's something wrong or something that feels wrong, it's probably because there is. And if you just hold on, hoping and praying, you're probably not going to get what you want. So just get out. It's usually better to be safe than sorry because the price again can crash really quickly when it does. So the trade I kept on referring today that we did on Wednesday, you can see the whole entire trade here live. And in the comment section, the first pinned comment, I pinned exactly the time when you can start the video. If you just want to watch the entry and exit, or you watch the whole thing and you'll get my whole mindset behind why I entered the trade. You could even see me building the watch list before the trade. So these day trading live streams kind of cover the whole entire thing, and they usually last around an hour. I also pulled up some additional resources such as additional continuation patterns that are often used in this strategy. Most of them are all very similar. The 1, 2, 3, 4 pattern is oftentimes referred to as the ABC pattern as well. And I also linked a few videos that I watched over and over again from Ross that are really, really excellent. So if you guys want to check out these additional resources, just go to enslow.com and you will see this post, or in the video description below. Just check it out. There is a link to this post as well. All right, guys, that's everything for today's lesson. I hope you found some value in it, and let me know in the comments below what kind of strategy are you trading? Have you traded the gap and go strategy? And which one of those 6 different ways, is your favorite way to enter this strategy? Give this video a big thumbs up if you appreciate this free content and you want to see more content like this. I will see you guys tomorrow for Friday's opening bell live trading. Till then, stay safe and make some awesome trades. Ciao, ciao.